Welcome to the Explainer. Okay, let's get right into it because something huge is about to hit the crypto markets. We are talking about a $17 billion tidal wave. This Friday, a massive options expiry is set to happen. And believe me, traders are definitely bracing for whatever comes next. So how in the world do we make sense of a number that big? Well, here's how we're going to break it down. We'll start with that massive number itself. Then we'll do a quick crash course on options trading so we're all on the same page. After that, we're diving into the specifics of this week. We'll talk about this fascinating idea called the max pain point and see if there's a perfect storm brewing. And finally, we'll zoom out and try to figure out what this all means for crypto's future. All right, let's jump right in. At the heart of all this is this $17 billion figure that has everyone watching the clock. This isn't just another Friday in the markets. No, this is one of the biggest options expiries of the entire year, and time is running out. Yeah, you heard that right. $17 billion. Just let that sink in. That is the staggering combined value of Bitcoin and Ether options contracts that are all set to expire this Friday and on just a single exchange. It's like a financial pressure cooker, and the lid is rattling. So, you might be asking, why should I care about this huge number? Well, because it's not just a number, it's potential energy. It could spark some serious waves in the market. To understand why, we've got to look at the financial tools at the very heart of this event. So let's pull back the curtain a little bit. What exactly are these things called options? They sound really complex, but they're absolutely key to understanding the potential volatility we're facing this week. Okay, here's the simplest way to think about it. An options contract gives you the right, but not the obligation, that's the key part, to buy or sell something at a price you agree on today for some point in the future. It's kind of like putting a deposit down on a house to lock in the price, but you can still walk away if you decide you don't want it. And these options basically come in two flavors. You've got call options, which are a bet that the price is going to go up, and then you have put options, which are a bet that the price is going to go down. You can think of it as a huge chess match between the bulls and the bears, and this week, the board is set for a really big game. Okay, so now that we've got the basics down, let's actually dig into the data. We're going to take a look inside this $17 billion event and see what it can tell us about what traders are thinking right now. So the first thing that jumps out is that this is overwhelmingly a Bitcoin story. Get this, $14.4 billion of these expiring options are for Bitcoin. Ether comes in a distant second with $2.6 billion. So the vast majority of the pressure here is focused squarely on Bitcoin. Now this is where it gets really interesting. Over 82% of all these options are what's called out of the money. In plain English, that means as of right now, they're worthless. These are not safe conservative bets. We are talking about high-risk, high-reward gambles on huge price swings. So out of the money just means the current price of, say, Bitcoin isn't high enough or low enough to make that option profitable. If you have an option to buy Bitcoin at $130,000, but the price is way below that, your bet is currently out of the money. It's like a lottery ticket that hasn't hit, at least not yet. And you can see exactly where people are placing these big speculative bets. The bulls, the ones betting the price goes up, are aiming for these really optimistic targets like $120,000, even $130,000. But on the flip side, you've got the bears, who are betting it'll fall, with a lot of bets clustered around $100,000. It is a massive tug of war between two very different, extreme outcomes. So all of this leads us to a really fascinating and kind of intense market theory. It's called the max pain point. And yeah, it's just about as pleasant as it sounds. The theory is pretty wild. It suggests that as you get closer to an options expiry, the price of the asset, in this case Bitcoin, will tend to drift towards one specific price. And what is that magical price? It's the one where the absolute largest number of options contracts expire worthless. The point that causes the most, well, financial pain for the people who bought all those options. So as we're looking at the market right now, Bitcoin is trading around $113,000. Pretty straightforward. But, and this is the fascinating part, the calculated max pain price for this expiry is $114,000. It's so close to the current price. In that tiny little gap between where the price is and where this theory says it wants to go, that creates a huge amount of tension. It's like an invisible magnetic force pulling the market toward that $114,000 number as Friday gets closer and closer. But wait, there's more. Because this huge crypto event isn't happening in a vacuum. there are other major things going on this week that could absolutely throw gasoline on this fire. We're looking at a true convergence of forces. You've got the $17 billion expiry in crypto. You have the US Federal Reserve meeting on interest rates happening today, and you've got major tech companies reporting their earnings this week. Any one of these events could move the markets on its own. All three at once? It's a potential recipe for a perfect storm of volatility. So let's take a step back from the short-term chaos for a second and look at the bigger picture. What does an event like this really tell us about where crypto is heading? This is about way more than just one volatile week. For one thing, just look at how much the market itself has shifted. It really wasn't that long ago that a crypto-native exchange like Deribit dominated this space with about 80% of the market. But today, their share is down to 44%. So who took the other half? Institutional players like IBIT. Wall Street isn't just knocking on the door anymore, they're in the house. And this is just more proof. You have some of the biggest banks in the world, we're talking Goldman Sachs and DBS, who are now doing their own direct crypto options trades with each other. This is a massive step. It shows that these digital assets are becoming a core part of the global financial system. So, the bottom line is pretty clear. These huge, complex, multi-billion-dollar financial events, they're not going away. In fact, they're probably going to become bigger and happen more often as the worlds of crypto and traditional finance become more and more intertwined. Which really leaves us with the final big question, doesn't it? As Wall Street dives deeper into crypto, does this kind of massive, nail-biting volatility just become the new normal? Is this the future that we should all start getting used to? It's a question that, for now, is still very much up in the air.